Hi, welcome to the Western Region MarketWatch, brought to you by RBI, Real Estate Business Intelligence, an MRIS company. We're going to dig into the most recent numbers from the Western Region housing market, which includes the counties of Allegheny and Garrett in Maryland, Grant, Hampshire, Hardy, Mineral, and Pendleton in West Virginia, and Clark, Frederick, Shenandoah, Page, Warren, and the city of Winchester in Virginia. Let's jump right in. Economic recovery loses steam. Housing demand in a slump. Tax credit leaves mess in its wake. We're bombarded with headlines like these every day. Some have merit, some don't. The truth is, the economy is currently driving the housing market and not vice versa. In their latest effort to combat sweeping national trends, local pending sales posted a miraculous 9.1% increase since July 2009 to land at 406 purchase agreements signed. Several regions across the country are suffering from 40% declines in buyer activity, but not here. It seems that there was no decline on the menu for July, and we couldn't possibly be happier frolicking in our black ink. 9% has never felt better. Since seller activity unfortunately outpaced buyer activity, inventory levels increased by 8.5% as active listings stepped up to 4,477 units. Prices responded rationally. They reflect the mix of homes that closed during the month. The July median sales price of $164,900 was a tiny 0.1% decrease from last year at this time. Expect the market to continue its ascent in the coming months, assuming buyer activity remains strong and current inventory is at least partially absorbed. Negotiations continue to move back toward the seller's favor. The July percent of original list price received at sale increased an even 2% to land at 91.1% of original list price. Stabilizing prices and negotiations leaning toward the seller's favor doesn't sound like a bad time to sell. Typically, the housing sector generates a number of corresponding construction, manufacturing, and other skilled labor jobs, which in turn fuels economic growth. These jobs then return the favor by lowering unemployment and creating new demand for housing. And then there is now. Job churn simply must fill the demand gap formed by the tax credit before buyer activity returns to the market. The Fed's August 10th announcement that it will be purchasing Treasury bonds is a clear indication it wants to maintain interest rates at historic lows, an important driver of purchase activity moving forward. To sum up, the housing market is really trying to hold its ground until the job situation improves. Only after widespread private sector hiring will demand be restored to the market and prices continue to stabilize. Until then, it's a hurry up and wait game. That's the Western Region Market Watch for this month. Tune in next month for the latest.